Love sack. Hey everybody, Walrus here from Walrus Street, bringing you your news and earnings for the week of June 7th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. There we go, we had another green week, back-to-back green weeks, most of the indices finishing above where they started. Last week also had some really exciting price action for stocks like GameStop, AMC, BlackBerry, if you're into those. And if you're not into those, I'm sure at least you enjoyed the show as a spectator from the sideline. This week's going to be a little bit slow for the options plays. I do have one towards the end of the video, but regarding the earnings for the next couple of weeks, the cupboards are looking bare. It's really companies that I don't have strong opinions for either way, or companies that don't even have options enabled on them. So keep that in mind as you get towards the end of the video, but I do have something back there for you. Let's get started with the news. The first news story is, to me, a little bit hilarious. We have the G7, rich nations back deal to tax multinationals. So the whole concept behind this is that multinational corporations, they set up tax residency in certain nations and sell their products in other nations. Typically, the nation that they set up tax residency in, they get taxed at a lower rate. That's what makes these nations tax havens. The G7 is proposing an end to this entire practice. The G7 group of advanced economies has reached a historic deal to make multinational companies pay more taxes. Finance ministers meeting in London agreed to battle tax avoidance by making companies pay more in the countries where they do business, and they also agreed in principle to a global minimum corporate tax of 15% to avoid countries undercutting each other. That's basically the premise of the entire article. The G7 is going to be taking this to the G20 next, and they're going to be proposing this. It has two parts: paying more taxes in the countries where those companies do business, and a global minimum tax of 15%. The funny thing here to me is that the globe is made of many, many countries. So how on earth is this possibly going to be enforced? If you take a tax haven country like Luxembourg and you tell them, okay, now you have to charge a 15% minimum on taxes in your country, what is going to make them agree to that? Also, the second thing that I find kind of funny is that the G7 agreed to this, even though G7 is home to no tax haven countries. They're going to bring it to the G20, which, shocker, is also home to no tax haven countries. The top 10 tax havens in the world: Luxembourg, the Cayman Islands, Isle of Man, Jersey, Ireland, Mauritius, Bermuda, Monaco, Switzerland, Bahamas. So we do have some EU countries in there, but there's really no way for them to enforce this. So to me, this feels more like just a feel-good story for the G7, where they can be like, haha, good job guys, we're doing it, we're saving the world of tax avoidance. I guess if it makes them feel better. Next big story, we touched on this last week. It is the Russell Reconstitution. So the Russell 3000 and the Russell Microcap made their preliminary index additions. Now, just a reminder, this is going to be happening all month long, and we're not going to have indexes forced to get into compliance until the end of the month by the 25th. So we might not see huge price spikes right now or on every Friday, but by the end of the month, these indexes that reflect the Russell are going to be reflective and have these new additions. Also, these additions are preliminary, so they may change over the course of the month. But right now, let's take a look at what's going in. A lot of these companies are the penny stocks that have been pretty big lately. We have Ag Eagle Aerial Systems. I don't know if you remember that one from a year ago, but some of the ones that I cared about most would be Bionano Genomics, Sidious Pharmaceuticals. FTC Solar is an interesting one as an energy play, a solar energy play that I've been thinking about getting into. They just started publicly being traded. Its addition into the Russell is a nice affirmation. Humanigen, I know I've got a lot of viewers on my channel who love Humanigen, so that one got added into the Russell also. MindMed, Palantir, Senseonics, and Shift Technologies, two companies that I've covered on my channel extensively, as well as Torchlight Energy, although I don't really understand Torchlight's addition into the Russell because it's not going to be a company much longer, but hey, here we go. Obviously, the list is much more extensive than that. Those are just some stocks that I've covered on my channel or my viewers talk about a lot, but this was really exciting to see. Last I looked, the ETF ETFs that are reflective of the Russell Index actually have hundreds of billions of dollars in assets under management. So this is very substantial to have these ETFs buying up these stocks. And it's also going to set a little more stability to the prices of these companies. So this is really positive. I'm happy to see this. We just mentioned Senseonics. Senseonics had some incredible news this week. If you saw the DD video I did on Senseonics, you know that they have a huge catalyst upcoming this summer. They have the FDA clearance expected for their 180-day continuous glucose monitoring sensor, their implantable sensor. They just released data on a very extensive academic study on the sensor's accuracy. The mean absolute relative difference is the big measure for continuous glucose monitors accuracy. For the 180-day one, against the reference value, the MARD was 9.1% for the primary sensor over 49,000 data points and 8.5% for the SBA sensor over 12,000 paired points. So even if you take those two percentages, weight them out, we're under 9% for the mean relative difference, which is absolutely incredible because the big issue with the previous forms of Eversense were that they were not as accurate as competitors like the Dexcom G6, which this is now more accurate than the Dexcom G6. And on June 3rd, just this week also, they released results from their G7, and their G7 ended up with a MARD of 8.7, which is only slightly better than the Eversense, and the G7 is not implantable. And the Eversense study was carried out over vastly higher numbers of data points. I'm actually feeling really good about Senseonics. We should be getting that FDA approval this summer. Nice catalyst. The share price absolutely popped on this news. I mean, it's clear as day.
I don't know what you mean by that. Can you be a little bit more specific?
Here was the run-up that we had to $5.50, and then we've been sitting here around $2, and then just on Friday on that news, we ended up hitting a high intraday of $3.20, settled off to $2.91, $2.88 after hours. Just look at this volume of people buying into the company. I think this study is going to be acting as kind of an affirmation for anybody who was hesitant to get into Senseonics before this FDA approval. I'm obviously more confident than ever. That accuracy data on the MARD is incredible. Lovely to see, and I'm super excited for the future of this company. Next news story, Bill Ackman's Pershing Square confirms talks to buy 10% of Universal Music Group at $4 billion. The deal values Universal Music at 35 billion euros, around 42 billion. The deal's not going to result in a merger, and the Universal Music is going to go ahead with a planned listing on the Euronext Amsterdam exchange in the third quarter of 2021. So the deal got a valuation of Universal Music Group at 42 billion, which is incredible because Goldman Sachs just valued the company at 56 billion. So right off the bat, it's like a 20% discount off the Goldman Sachs valuation, which means Pershing Square Tontine holders are going to be getting more bang for their buck here. A lot of people were not happy about this. For a little backstory, if you're not familiar, Pershing Square Tontine Holdings was the largest SPAC. The NAV was $20, which was incredibly uncommon for a SPAC. Most NAVs for SPACs are around $10. A lot of the investors for PSTH were expecting that Bill Ackman was going to get a merger with Subway or with Stripe or some other tech unicorn, even though Ackman himself has said he was looking for a mature company, a value investment to be found. And what could be more valuable than the largest music group in the world coming off a financial year when they haven't had any income for concerts? To be fair, this merger is incredibly complicated, and I am going to do a video on it at some point here. Hopefully this week I'll put together a presentation and go through it in a very organized fashion. PSTH shareholders will own 3 separately traded securities following the completion of the transaction and the issuance of rights via SPAC. They're going to have shares of UMG, approximately $14.75 in value. They're going to have shares of RemainCo, which is going to be still traded under PSTH, and approximately $5.25 in cash value per share. If you can't do math, $14.75 plus $5.25 equals $20. That was the NAV of the company. They're also going to be getting one transferable 5-year right per share, a SPAR, of Pershing Square SPARC Holdings, SPARC, which is expected to trade on the NYSE. That's kind of like a call option. So the shareholders are going to be getting in at the pre-IPO price of Universal Music Group. I've been seeing some valuations that UMG is probably going to IPO somewhere around $16.75, and the PSTH shareholders are going to be getting in around $14.75. So they're already getting in at a discount, which means on day one of trading, their valuation is going to go go up. PSTH is only going for $4 billion into UMG for a 10% stake, and the SPAC's market cap was about $5.5 billion, which left them $1.5 billion to play with, so they're going to be putting that aside for a future merger. To me, this is incredibly exciting because you're getting valuation, you're getting an industry leader in Universal Music Group that's already generating profits. Obviously, a lot of people were really upset about this, and you could see that on the chart immediately. Right before the announcement, we closed the day at 25.05. The next day, we opened at 22.30, closing at 22.06 before rising to 22.18. We ended up hitting a low of 21.33 intraday. Keep in mind the NAV is 20. This was just a nutty drop in share value. I mean, a 12% drop in one day off the announcement. I really think this was a bit of a knee-jerk reaction by a lot of investors who are expecting, like I said, to land Stripe or Subway or something like that. Once you read into the details of this merger and you understand how much future value you're getting here, you're getting a lot of future value here. I think a lot of SPAC investors are a little bit spoiled because they're expecting some sort of tech unicorn. It's almost like they want their merger to be with a company with billions of dollars in revenue, something like 60% CAGR forecasts, and somehow it's only trading at 2 times earnings. Like, they have these ridiculous expectations for a company that are just impossible. And because this SPAC had the highest NAV, had a ton of money into it, had a lot of big people behind it, I think people were expecting something like that, but it's just not reality. And the reality here is Bill Ackman ended up structuring an incredibly complicated, awesome deal here for the holders. I was not holding PSTH before I saw this deal. After I saw this deal, I ended up buying in around $22 with like 218 shares on Friday. This one just screams value opportunity. Next up, obviously, unless you're living under a rock, AMC, GameStop, BlackBerry all went on a tear last week. AMC was obviously the biggest mover of them. The company put out a notice saying investors would get free popcorn at AMC. And let's be real, you know, when we're talking about overpriced commodities in the world, right now we've got like copper, lumber, we've got steel, we've got corn, we have movie theater popcorn. It is right up there. Hella good deal. Buy some AMC, get some movie theater popcorn. You're making bank. Look at that ROI right there. If you didn't actually look at the charts last week, this is what AMC did. Just huge green candle. We closed around 32 on Tuesday. Wednesday, we opened at 37. We ran as high as 72.62 before coming back down the last couple days. Currently, after hours, we're 43.72. GameStop also climbed up. BlackBerry had a really great spike. This was really a great week for those sentiment stocks. This news just broke on Saturday, and I was really excited to see this. A couple of weeks ago, I talked about Microsoft's possible acquisition of Discord. Obviously, that fell through, but there was some concerns about whether or not Microsoft would be tagged for antitrust monopolistic practices. Microsoft had another acquisition in the works for Nuance, which is a voice recognition AI company. This merger just got approved to go through. Microsoft wins US antitrust okay for $16 billion purchase of Nuance. The deal was announced in April, came after the companies partnered in 2019 to automate healthcare administrative work such as documentation. And Nuance said in a filing to the US SEC on Friday that the deadline for the government's objection to the deal expired on June 1st. The deadline passed, the government can't object. Microsoft and Nuance have the green light to go through with this. And I was really excited to see this one because it showed me that Microsoft is not on the same level as like Google and Amazon in the government's eyes with these considerations for antitrust practices. So in my mind, this kind of gives Microsoft the green light to pursue other acquisitions. Really quick one here. AMD confirms it's powering the gaming rig inside Tesla's Model S and Model X. Elon Musk claimed you'd be able to play The Witcher 3 and Cyberpunk 2077 on a 10 teraflop gaming rig he's stuffing into the new Tesla Model S's and Model X's. AMD is providing the guts with an AMD Ryzen processor with its own integrated graphics paired with a discrete AMD RDNA 2 GPU. And you could kind of just see a little rendering here of what it's going to look like. This really begs the question, who is going to be sitting in their super expensive Tesla looking to play The Witcher for 6 hours or something like that? I don't really know what audience this caters to, but still it's a cool opportunity for AMD because they're getting paid regardless. They're getting paid every time their processor ends up in one of these units. So really great for AMD. Interesting for Tesla. Quick note on Bitcoin this week. Guggenheim, which is one of the larger fund managers. I mean, it's not like Vanguard level, but it's still kind of on the larger side. slide. They have 270 billion assets under management, and they're seeking Bitcoin exposure. They just put in a filing with the SEC. I pulled it up on the SEC website. This is the Form N2. It's going to be called the Guggenheim Active Allocation Fund. The fund may seek investment exposure to cryptocurrency, notably Bitcoin, through cash-settled derivative instruments such as cash-settled exchange-traded futures, or through investment vehicles that offer exposure to Bitcoin and other cryptocurrencies, through direct investments or indirect exposure such as derivatives contracts. So they're opening up a new fund, a new ETF, and they're looking to get Bitcoin basically any way they can. They just want exposure to it, either through direct acquisition or through another fund that kind of mirrors the cost of Bitcoin. This is interesting, and it's nice to see the adoption, and I do like the fact that they filed this when Bitcoin is already substantially down. You know, Bitcoin's down $30,000 since its high, so this is kind of almost another step in the direction of adoption for cryptocurrencies when Guggenheim goes and does something like this. Comically enough, if you look up the Guggenheim CEO's tweets about Bitcoin, he seems to be really confused. A couple months back, he said Bitcoin was going to hit 400,000. Then he said it was going to hit 600,000. And then like a couple weeks later, he's like, oh no, it's another Tula craze, like tulip mania. I'm not really sure where his head's at on this. Obviously, Guggenheim is interested enough as a company to open up a fund that's going to have Bitcoin exposure. Pretty light on the politics this week. Just one story. Joe Biden extends Donald Trump's blacklist of Chinese companies. President Biden on Thursday signed an executive order to shore up and extend a ban on United States investments with certain Chinese companies that was first instituted by his predecessor, Donald Trump. Biden's order blacklists 59 companies tied to Chinese military-industrial complex and surveillance industry and bars people in the United States from engaging in the purchase or sale with them. Here's the entire list of the companies. Most of them seem to be like Chinese national type organizations: China Aerospace Times, China Communication Construction, China Shipbuilding Industry, China Railway Construction, China State Shipbuilding Communications. You know, it goes all the way down. I think the only one here that most people are familiar with is Huawei. So Huawei is still on the banned list. The most shocking thing here to me is not that this is happening at all. It's the fact that Biden actually extended and even built upon an order from Donald Trump. So this was something that was kind of shocking because it seemed like he hated everything Trump did and was trying to undo a lot of it. But apparently this is something that is apolitical, and the United States just doesn't support US investors investing into these companies. Couple of earnings stories really quickly. Lululemon Athletica announces first quarter fiscal 2021 results. Revenue increased 88% to $1.2 billion. Diluted EPS of $1.11, adjusted EPS of $1.16. The CEO said our first quarter results reflected strength across all drivers of growth, fueled by the continued expansion in our e-commerce business, rebound in brick and mortar stores. Strong performance across categories, channels, geographies demonstrates the momentum and strength of Lululemon as we shift into the new normal. Honestly, I am not even remotely surprised about these results. But the sad thing is, I didn't think of doing anything about it. Like, I saw Lululemon reporting this week. I knew it was going to be like gangbusters earnings in my head. How do you ask, did I know that? Simple. This is one of the most popular exercise clothing brands with women in America, and it has popularity around the world. Everybody right now has their COVID bodies. It's like the freshman 15, except the COVID 30. Or something depressing. So we're coming out of COVID. Everybody's getting back out into the real world. What's the first thing you're going to do before you start working out? Buy some new workout clothes. You know, their e-commerce expanded. Bravo to anybody who's in on Lululemon. Back in 2009, we had a low of $2.17. Who would have thunk it? We're up here around $3.29 right now. At one point back in September, we hit a high of $399.90. The earnings were great. They didn't cause much of a jump in the stock price, but a lot of that probably has something to do with the fact the company's already trading at a PE of 73 and a forward PE of 50. How much higher can the valuation really go off of a good earnings report? A lot of this is probably already baked in. I always talk about my options plays on this channel, and then I recap them a week later. Secureworks reported its first quarter fiscal 2022 results. Guys, leading up to this, I went back and looked at my videos. I had made like 16 of my last 17 options were correct. This one I blew, and I blew it catastrophically. I will be the first one to own up to my mistake. I bought puts on this company, and I could not have been more wrong if I actually tried to be wrong. After the earnings report, the price ended up rising 12%, which killed all value in my options. And there's one reason for it. Right here, I mentioned that their Tegas network was getting good reviews and and it was popular. Well, turns out they have 500 customers on their cloud-native Secureworks Tegas platform, resulting in an ARR growth for the product of 191% on a year-on-year basis. Their platform is more popular than I ever expected. Good for them. Tegas is doing great. They're onboarding a ton of customers. They're incredibly profitable. The future's looking great for Secureworks. I applaud them. I'm going to take my lumps for this one. I'm sorry for that. You know, I said there was one reason, which was that news, but there's actually two reasons. Last week when I did this option, I told you guys I was playing an FD, which is like a really high risk, out of the money, short dated option. That really killed me because I got broken by two things. The company's good earnings, but also the IV crush of the price around earnings. And the fact that it's short dated, there's really not much of a hope of me getting this money back before the options expire. I'm keeping them open because they're basically worthless right now, but I'm expecting to lose 100% of the money that I put into this at this point, which is obviously sad. Funny side note, Wednesday night, I put out a tweet before market opened. So that was Wednesday morning for you guys, Wednesday night for me, that my Secureworks position was up 37%, my Quanex position was up 10%, and I was going to close them out, and I fell asleep that night with my phone in my hand before I could set my limit sell. So I actually could have closed this out and made a 37% gain, but instead, stupid sleepy walrus slept through trading that day without a limit sell, and I ended up blowing it, you know? Things like this happen. I'm not going to dwell on it. I'm moving on. Because Quanex reported their earnings, and theirs were stellar. So if you remember, I did propose two options plays last week, blew it on one of them, killed it on the other one. Quanex had robust revenue growth realized across all operating segments, significant margin expansion in North America and Europe. They repaid 25 million of their debt. They had positive outlook. They expanded their guidance. Everything was great. Take a look at their net income here. They're up almost 200%. This is like a 3x gain from last year on year for net income. Adjusted diluted EPS is up over 100%. This is like 120% gain. So Quanex was, as expected, great. I ended up closing out this option at about a 26% gain. I know some people ended up getting a little bit higher than that. I did see somebody tweet me that they got a 42% gain on that. So really great job with Quanex. Going into the future, I'm just not going to play any more FDs. It's a really high risk play and it's kind of stupid. And if you do a short-term option around earnings, you're basically giving yourself a lower chance to win. You're stacking the deck against yourself. Sure, you might be paying a lower premium, but the chances of turning a profit are infinitely lower because you've got the implied volatility working against you and you've got the possibility that your read on the company's status is wrong. So I was wrong on both cases with Secureworks, but at least I was right on Quanex. So in the future, lesson learned, no FDs, just going to be playing longer dated options at least a month out. Let's take a look at the upcoming earnings. There is almost nothing on this that I am excited about. One thing I gotta say, Wednesday before open, Lovesac. I didn't know what this was. It's a beanbag company. I seriously thought this was a sex doll company or something totally inappropriate, but it's a beanbag company and they make beanbag furniture. They're reporting on Wednesday before open. I don't know anything about it, but I was interested to learn that. Wednesday after close, of course, we have GameStop. This is going to be a big day on GameStop. We can see if there's going to be a share recall, which could trigger something massive. We don't really know yet. Past that, there's a lot of companies on here that I didn't really know much about. FTC Solar is one that I'm interested in, and I'm going to be following their earnings. They went public a couple weeks back, and their share price has fallen off pretty hard. Since then, they've been climbing back, and they have some analysts that were giving them some pretty positive forecasts. So I'm not going to do anything for sure with FTC Solar this week, but it is going on my watch list. We have a couple of avocado companies. You know how like on earnings reports, typically the tech companies report together, the banking companies report together, the industrials report together. This is avocado week. Calavo and Mission Produce. So we have two avocado companies reporting this week. Avocado prices are up. I looked up avocado futures. That's not actually a real thing. Nobody trades avocado futures. I don't know. I mean, there's corn futures, there's soybean futures. I was just taking a shot in the dark there. If you're into avocados, those are a couple of interesting companies, I suppose. Campbell's Soup, which is one of my favorite consumer staple dividend companies. We've got Vera Bradley, Signet Jewelry, and Vince for like the designer high-end retail retail segment reporting this week. Fuel Cell, F-Cell, a company that just doesn't make money and way overvalued. People seem to like it. But for my options play for the week, I do want to take a look at Greif right here. I don't know if this is pronounced Greif or Griff, but I really feel bad investing in a company that pronounces its name Greif. I feel like that's just doomed for failure, so I'm going to pronounce it Griff and pretend that that's correct. Greif, packaging success together. We've been covering a lot of industrials, commodities, that type of thing on this channel lately. We know that there's shortages in commodities all around the world, and the prices are going up. So what happens when prices are really high in one sector of the world? Well, people tend to ship and order from abroad to save some money. What do you need when you ship those commodities from abroad? More containers. Greif makes containers. Steel, fiber, industrial closures, flexible IBCs, plastic, tube, and core. And the cool thing about a lot of Greif's products is that they recycle their own products in-house, which lowers their cost basis for a lot of their products. Right now, with steel prices so high and some of the resins that they use for their paper products being really high, the company can charge more money, but the amount that they're spending on their products is slightly less because they focus so much on sourcing their raw materials through recycling. This is from their last earnings call. Product demand was strongest in the Asian Pacific region, where steel drums rose by 3.5% on a per-day basis versus the prior year and benefited from improved industrial trends and favorable comp in China. Demand conditions also showed improvement through most of Europe. Specifically, we experienced strong demand through Eastern Europe, where steel drums and rigid IBCs rose by roughly 9% and 11% respectively. Those are their two most expensive items, steel drums and rigid IBCs, and those are the ones that are growing at the highest rate in the international markets. Just 2 weeks ago, the company raised their Q2 EPS guidance above the consensus. So their EPS is now expected to be in the range of $1.11 to $1.15 per share. The consensus was $1 compared to previous guidance of 96 cents to $1.06 per share. The improved guidance is mainly due to stronger than anticipated volumes and sales prices in the global industrial packaging business and a slightly lower than anticipated tax rate. So what does all of this mean? The company itself is raising guidance. In Q1, they said they were getting a lot of profits from their steel drums and their IBCs in the international market. This sounds to me like they raised their guidance because they know they're about to have a blowout quarter. Also, something worth noting, when a company raises their guidance, they don't raise their guidance to a point that they're then going to miss 2 weeks later. Instead, they raise their guidance to a point that they're sure they can meet or exceed. So I'm expecting Greif to either report exactly at that new guidance they issued, which was $1.11 to $1.15 EPS, or slightly above it, but definitely not below it. This should cause some type of sensation because they're already then going to be about 15% above the previous consensus. If we look at the daily chart for Greif, we could see their last earnings report here. They ended up just catapulting afterwards. The earnings, they closed that day around 46.70, and right now we're sitting at about 60.50, but we've been in a downturn. The MACD is descending. The RSI is almost hitting oversold at this point. We previously hit a high of 66. Now, I looked into the company. The company does have a lot of debt, so I am not going to be buying any shares. I don't want this to be a really long-term hold, but I did learn my lesson last week with the FDs. So what I'm going to be doing, looking at the option calendar here, I don't want to open up June 18th, obviously, because that's such short term. July 16th, it's a little bit close, 40 days. I'm going to be looking at these October 15th calls. If you look at the open interest, the most popular call, the most liquid call right here is going to be the $60 call. You could see the 27 here. The second most liquid one is going to be the 55, but that's getting a little bit pricey at 880. Also, there is some open interest on the $65 call. Because I'm moving all the way out to October for this one, I'm strongly considering the $65 call for $360, but depending on the price action on Monday morning, I might go with the 570. Now, after hours, we're already up to 61.50. So this is probably going to be pricing me out of the $60 call. I don't know. I'm really in a toss up here. I'm going to be going for those October calls on Greif, $60 or $65. And as usual, I'm going to be unloading them right around a 20 to 30% gain. I know my gain numbers are silly. My gain projections are silly. I had somebody joke with me about this on Twitter that I'm expecting a 20 to 30% gain. But in these shipping materials, in the current state of the commodities market, I really feel like that type of gain is possible with these incredible earnings report that the companies are putting out. I'm expecting Greif to meet their updated EPS, possibly exceed it slightly, but not by much. And I'm going to be getting those October calls. There you have it. That's all for me today. I hope you guys enjoyed the video. Like I said, I'm probably going to be releasing a video this week, just a short one, explaining the Pershing Square Tontine Holdings agreement with Universal Media Group, with Vivendi, with Tencent, with everybody that's involved in that situation. So because I'm going to be making that, and because I am going to be spending some time putting together a presentation for that, I'm not going to be doing a DD video this week. I hope you guys enjoyed the Brickell video last week. If you're new to investing and you want to support the channel, please check out my Webull referral link below the video. If you sign up for an account using that referral link, deposit $100, you get a free stock, I get a free stock, everybody wins. Because I'm partnered with Webull, the free stock that I'll be getting is worth $30 or higher, and I appreciate it. As always, if you enjoyed the video, please like the video, subscribe to the channel if you want to be alerted to all my content as soon as it goes live. Make sure you hit that notification bell. All right, everybody, thanks a lot. Good luck investing, stay safe, and I'll see you next time.